Hello and welcome to another video from stageanalysis.net. Today's video is the Breakout Stocks and Shares watch list from our weekend scans of the Nasdaq and NYSE stock markets, where I'll run through today's most interesting stock charts in the US stock market that are setting up to potentially break out or have recently broken out already and so might be worth watching for their next pullback or consolidation. A quick disclaimer: all stock charts and ideas presented are for educational purposes only, so always do your own research before making any trades. We begin tonight with AVLR, which, as you can see on the chart on the left here, is obviously this is a daily chart, so it's making a stage 2 continuation breakout last week. We had a small pullback at the end of the week here. Volume was light low, it actually declined at the end of the week, so it's approaching its highs, so we got the potential for stage 2 continuation breakout to new highs here. Moving on to CDNS, it's another very similar pattern. It's pulled back to its 200-day moving average and the 50-day moving average. It's here, the blue line, it's moving up. We've had some little volume pops here. The volume got quieter as we've broken out here. It made a stage 2 continuation breakout, again below the highs though, so it's now popping to make a further continuation attempt. Relative performance is trading in line with the market, just slightly below. So that one's got potential for new high breakout as well. Next is CHGG, where we had, again, very similar chart, breaking out from a cup and handle type pattern as we've had with the previous two. Sort of cup pattern on that one. But we've got a cup and handle type pattern here. Again, the red line is the 200-day moving average, blue is the 50-day. And it's broken out above resistance in the last week or so, and it's approaching the highs again. Next we have COST, which has been trading near the highs since September, been consolidating sideways around its 50-day moving average. It did drop below for a little while, still got strongly rising 30-week moving average below it, so it's approaching its highs again. Volume is around average currently, and it's pulled back in line with the market in terms of relative performance, so this one's got potential for a stage 2 continuation to a new high. Next we got CRMT, which has been having a tight consolidation near the high in the handle with some volatility contraction occurring. So as you can see, we've had a pop up here, a gap breakout, moved above its highs. It's been forming a handle type pattern here, but you can see the little volatility contraction here. It's got gradually less volatile and the volume has dried up dramatically. So we've got strongly rising 50-day moving average here, which has been catching up with the price. So it's now closer to its 50-day moving average and closer to the highs. So if we get a breakout above the highs on volume, that one would be interesting. Next is DISCA, which is Discovery. We've got a very clear cup and handle type pattern here with a rebound at the 50-day MA. Potential for a stage 2 continuation breakout attempt here. It's just sitting underneath resistance from the previous high back in July here. And we've got the slightly downward sloping handle here, so it's a nice setup if it breaks out on some volume. We always want to see volume on a breakout, so if it does pop above the breakout level up here, then we'd want to see an increase on the daily volume at least, and relative performance to start outperforming again. It's just slightly dipped below its zero line here. Next we've got EBMT. This is a weekly chart, so a little bit different to the other charts above. As you can see, this had a stage, what we call a stage 2A breakout down here with 2 or 3 times its average volume. Like when it broke above its stage 1 range, it's had a strong stage 2 advance, and this is first significant pullback to the 10-week moving average at least. It's still a long way above the 30-week moving average, which is strongly rising, but it's formed quite a tight consolidation pattern over the last few months, so it's got potential for an early stage 2 continuation breakout attempt. So we'll see how that one goes. Next is FARO. This is what we call a stage 1B. where it's been forming a stage 1 range over the last 8 or 9 months or so. It did have a stage 4 continuation breakdown attempt here, which immediately failed and swung back up, so shook out a lot of people there. So it's now cleared to potentially move higher again. We've had another heavy volume shakeout down here, so it looks like it's got potential to make a breakout attempt. Relative performance has moved in line with the 0 line, so it's in line with the S&P 500 again. So if it does break out, this should move above the 0 line and be into good territory, so one to watch. Next we've got FLIR, which again is a weekly chart and showing another stage 1 range, where we've had the stage 1 range forming. This volatility came in a bit. We did have one thrust here, not sure whether that was bad data or it actually did break down there, but it's at the top of its range again now. So this is what we call the stage 1B, where it's what we consider late in the stage 1 basing phase. So there's potential for a stage 2A breakout attempt, which we'd want to see breaking out up into here, and we'd want to see at least 2 times the average volume. So looking at the volume bar would want to be somewhere around this sort of level up here. So it's one to watch. Relative performance has been underperforming low, so this would have to dramatically improve. What's next? FWRD, another weekly chart here. So showing a cup and handle type pattern approaching its highs. Obviously it's got potential for a breakout to new highs. Don't really need to say much more about that one. HMI. This one had a stage 2A breakout last week, but the volume didn't meet our 2 times the weekly average volume requirement, and it's still under some resistance here from early in 2019 as well. So although the volume was stronger for the last 2 weeks, it could well be considered it was stronger, but it wasn't exactly what we were looking for. So I would give it a rating of around a B minus breakout. It's not the A plus type of breakouts we look for, but it is an interesting one, so I thought I'd highlight that. INTU. This is a daily chart again. I've zoomed in on the daily on this one because the weekly didn't show you very well. So it's pulled back to its 200-day moving average and rebounded off and made a breakout attempt again back above its recent highs. It's still got resistance from its 2019 highs up here, but it is breaking out from within a couple of month range here, with the moving average just turning up again. And a little bit of a volume pop there. Relative performance is slightly below the S&P 500 here, so it's slightly underperforming, but it's got potential for a stage 2 continuation breakout higher. Okay, next we've got LVGO. This again is a daily chart. It's a very new issue, only came out in August time last year, looks like, or late July. It's been basing since October lows, and it's been testing previous resistance at the moment. As you can see, we're at a line where we had the low here. It's obviously tested that this week and pulled back. Volume on the pullback was lower than the rising volume here, so this one's got potential to make a stage 2A breakout attempt. Okay, next we've got MKSI. We're back to a weekly chart again on this one. It's made a large cup and handle type pattern. It's quite far above its rising 30-week moving average at the moment. It's had a tight consolidation for the last 4 months or so, and it closed the week at the top of the range, so potential for a stage 2 continuation breakout in that one, with relative performance strongly rising above its 0 line here, so it's outperforming the S&P 500. And next we got NNBR. This one has been basing in stage 1 since the middle of the year. As you can see, had an initial short covering rally type pop up to towards its 30-week, still declining 30-week moving average. This is an area where I've noticed a lot of people like to buy, but in stage analysis we do not. We look for a strong base to form and for the resistance to wane before we break out, and we buy once the stock moves into stage 2, which is above the base, and then on pullbacks within the stage 2 and breakouts within the stage 2 range. So this is in a stage 1B range at the moment, as it's getting late in its stage 1 range. It's been in stage 1 for good chunk of the year, 8 or 9 months, so it's got potential for a stage 2A breakout attempt, but the stage 4 decline was quite a steep one, so we've still got, I've used the Ichimoku cloud to highlight the time-based resistance that we've got on this, because we still could have quite a few bag holders in this stock of people that bought up here in this sort of range or here and are still stuck in the stock and looking to get out even. So you can see basically if we do break out, we've still got some resistance to work through, which could obviously taper any gains, but it's definitely one to keep an eye on as it's moving nicely and starting to move in line with the S&P 500, and so on the breakout it would start to outperform. Next we got MVCR, which is, we're back to a daily chart here. We've got obviously handle type pattern here with a little volatility contraction, had a potential for a stage 2 continuation breakout attempt to new highs, had some strong volume on the move up last week, and it's outperforming the S&P 500, so another one to watch there. NWL, this one is in stage 1 currently. It's obviously, some people would argue it's in stage 2 because it's broken out and it's above its rising 30-week moving average, but they would argue this was the stage 1 range, and that could be true, but it's because it's still below resistance. I tend to downgrade stage 2 breakouts when they're still below heavy resistance zones. So this, to me, was still forming a stage 1 base, and this is secondary part of the base, so all of this then becomes a larger stage 1 base. But yeah, people argue on that one. They'll say this is the stage 1 range down here and the breakout was, stage 2 breakout was down here, but as you can see we're now heading into resistance, so obviously I always prefer to stage 2 breakouts once they get through resistance. Next is PETS, PETS. Again, similar sort of pattern. We had a gap breakout into an early stage 2. I'll give this one a stage. This one's definitely a stage 2 because the gap was quite strong, and so we are in stage 2 on this one. It gapped above this resistance, this closer resistance zone here. So this is initial stage. I've actually marked it up as stage 1, but shows what I'm talking about here. But looking at it again, actually, I would actually put this already in early stage 2. It's just it's below resistance, and like I said on the previous one, I tend to downgrade stage 2s to stage 1 when they're below resistance still, because they tend to struggle. But if we get some strong volume coming into this, it could continue and move into stage 2 in earnest. Okay, next we got PLAN. We've got a daily chart here, so we've got like a cup and handle type pattern forming. It's with a volatility contraction here, so we had 2 curves here and we've broken out above, so cup and handle type pattern, but low volume on this consolidation here on the pullback. So stage 2 continuation breakouts to new highs is possible. We've got a little bit of resistance from the highs here, so you'd want to see, looking for obviously another continuation up here with some stronger volume. Relative performance, it's been outperforming the S&P 500. Next is POL. This one is a stage 2A breakout on strong relative volume, but it's still below some resistance from the early 2018 low. So there's potential for an initial continuation breakout attempt. As you can see, it was a strong stage 2A breakout here with the volume that we look for. It was just above our minimum volume requirement of around 2 times the weekly average. The relative performance started to outperform on the breakout and stayed above the 0 line on this little pullback to what's known as the B entry point in stage analysis as an investor method. we do have this resistance zone low to deal with this one, which in stage analysis we generally don't like, because we like to be into clear areas and away from any kind of resistance. So this one still could have some struggles and need to consolidate and grind higher, but we will see. Next we've got PTON, which is the Peloton. It's IPO'd in September last year, looks like. I've highlighted the IPO level, which we're back above again now. It did break out from an initial base and move higher, and then pull back in December quite strongly, back to the what we got there, 50-day moving average. So it's looking like it's attempting to break higher again here, so potential for a move into stage 2. We've got SMG. This is a multi sort of layered cup and handle type pattern. We've got a small cup and handle in here, and we've got a bigger cup with sort of volatility contraction pattern. So we've got 3T volatility contraction here and breakout, and we're obviously stepping into the highs at the moment. There was no volume on the breakout, so we could potentially consolidate around this level for a little bit before breaking out into stage 2 continuation in earnest. But we've got some strong rising moving averages here, so this one looks promising for further new highs there. Next is TTWO. Again, daily chart. I've highlighted a small breakout it's had, so it's got a potential. It's got some resistance again from the August highs here, so it's got potential for stage 2 continuation breakout to new highs. There was some volume, smaller volume pop on that little breakout there, so it's at a minor entry point at the moment. So with obviously it's not too far from its 50-day moving average in the recent low, so yeah, you could get that one's actually a good little entry point there for a small trade maybe. So next, with a stop loss below the swing low here and the 50-day moving average. So next is VECO. Again, making a stage 2A breakout attempt. It moved up into stage 1 and ground higher around its 30-week moving average with a breakout attempt back here in October, which had a little squat pattern there. Didn't really make it, and then it's consolidated around that level again and it's popping up again, but it is moving into a resistance zone at the moment still, and the volume didn't meet our requirements on the stage 2A breakout attempt, so we'd want to see much more volume coming in on the follow through week for this to become a valid stage 2 breakout. Okay, we got VRRM, which making a stage 2 continuation breakout attempt to new highs with a bit of a volatility contraction pattern on the weekly throughout 2019 there. And we got VTNR, which again, this one is it's quite a choppy range through 2019. Almost broke down into stage 4 at one point with a potential breakdown attempt there, and then reversed strongly on some strong volume around here on this reversal, pushed back up towards its resistance from trendline resistance, and has now made a breakout above here on more than 2 times the 4-week average there. So we've got a valid stage 2A breakout on VTNR there. Next is WERN. This one's a little bit of a cup and handle type pattern across the last 2 years. That's quite a big pattern, and it's looking like it's potentially attempting to break out to new highs there. It's outperforming the S&P 500 and ZUMZ. So this one, just a daily chart again, potential for a breakout to new highs. Okay. I think that's the lot actually. I just wanted to go back through these. There's a couple here. Okay. Thanks for watching, guys. It's been to see the daily stock watch lists. Go to stageanalysis.net, and obviously make sure you like the videos, and please subscribe, and I'll see you on the next one.